Welcome to Save US Taxes Legally. We're going to start off with three simple questions. Number one, do you want to save US taxes year after year, generations after generations? Put yes, Y into the chat, or N for no. Number two, do you want to leave a legacy for future generations? Again, in chat, put yes, Y for yes, N for no. Question number three, do you want all lawsuits to become frivolous and go away? In chat, put Y for yes, put N for no. Easy enough. Now imagine saving 4, 5, 6 figures in taxes every single year. You could use this money to put back into your business, to pay off your mortgage, to buy a new vehicle, to take your family on a well-deserved vacation, to give to your favorite charity, or to save for retirement, or do all of it together. Imagine no one knows what you own, where you own it, how much you own, what you do with it, and when you sell it. Imagine all lawsuits become frivolous and go away. How much time, money, anxiety, worry just disappear. Welcome to Save US Taxes Legally. My name is Sally Gimmon. I'm the owner of thetrustisusyou.com and a free class on the Great Discovery, which is my first name and my last name. Whoops, you don't want to see that. Sorry, my first name and my last name. When you go out to the free class on the Great Discovery, www.sallygimmon.com, you're going to get 3 article presentations like this, 3 articles from Forbes magazine I did not write, 2 pages of case law so you can research this to your heart's content, and then you can also see clients saving thousands of dollars. All of this for free. I want to teach this to as many people as possible. I believe every US investor, US business owner, US entrepreneur, and US 1099 income earner needs to know this information. It's not taught in schools. I believe since I had a $94,000 tax bill and I spent 5 months researching this and found the secret of the rich, it's my duty and my honor to teach this to others. I also believe the playing field must be level for everyone. The Amazons of the world get free land on Staten Island, and my brother lost his brewery because the rents went too high. That's not fair. So let's get into this. With the tax shield method, it's legal. It's in IRS Tax Code 643B, like Bravo. It's been in front of the United States Supreme Court on 2 separate occasions, and it's won both times. Now, I'm going to give you a basic understanding of taxes because it's a taboo subject. Death and taxes, no one likes to talk about it. There are 4 ways to file your taxes. Single, head of household, when you have children 18 or under, married jointly, and married separately. There's 7 different layers to the tax bracket. The more money you make, the more money you pay. Now, very quietly, on January 1st of 2025, the IRS changed married filing separately. It raised their taxes to the same as single, the most expensive way to file, all the way up to the 35% percentile. If you learn nothing else from this presentation, if you are married, please file married filing jointly because it's the cheapest way to file. Now, my personal story, well, let me give you the history about the Spendthrift Trust first. It comes from England way back when King Henry VIII, that famous king who chopped off his wife's head, started the Church of England. Murder a few ladies, start a church. Hey, why not? He went to go tax the lords and ladies of England, and they went further back to the Magna Carta, 13th century, and said, oh, no, 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 King Henry VIII, you can't do this. It's contract law that came to the colonies while we were still part of England. The law firm I work on behalf of inherited a trust that turned 350 years old in 2023, before we were a country. Our current tax code that we are under went into effect February of 1913, and the super rich families of that time, the Carnegies, the DuPonts, the Kennedys, the Rockefellers, made sure they could save taxes. Well, if they can save taxes, we can save taxes. I just wanted the law firm I work on behalf of was started by Paul Benson, a Harvard law professor who wrote 5 separate trusts 77 years ago, and not a single trust has ever been audited. Now his grandson and great-grandson run the law firm, and they're so confident they will give you, if you get questioned by the IRS, they will defend you free of charge. In 77 years, it's happened once and once only. The senior IRS agent flew down to Houston, where the law firm is, spent 5 hours in the boardroom going over things. He approved the trust, and he sent an unsolicited letter back to Benson Financial Trust explaining how he did things. They're so confident that this trust will hold up in any court. Now, I want you to do as much research as possible. When you do research, you will find an IRS opinion letter dated September 11th, 2018. They literally say in this opinion letter, the IRS does not like tax code 643B. They do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. It's their opinion. In my opinion, I do not like lima beans. Don't ever make me eat them. That's my opinion. I'm sure you have many opinions yourself. Now let's go over the 5 elements. You need all 5 elements to make this work. Irrevocable means it goes from generation to generation. The Rockefellers Spendthrift Trust is 7 generations old and has over 400 people under the same EIN or employee identification number. They file a 1041 tax return, but each family files a separate one to do this. It does not mean that it's hard to get things in and out of the trust. Personally, I have wholesaled 28 properties in the past of, let's call it 5 years, and I've never had a problem doing that. I hold everything within both my business and beneficial spendthrift trust. Complex. This trust can hold money day after day, week after week, month after month, year after year, decade after decade, century after century. 97% of the trusts sold in the United States are what my mom and dad had, and what Susie Orman talks about on PBS television, the family trust or the living trust. There's nothing wrong with the family trust. It is designed to avoid probate, and then it dissolves and all the assets are split up. This is not your mom and dad's trust. This is what the Rockefellers, the DuPonts, the Carnegies, and the Kennedys have, and other famous people. Discretionary. Whoever is the trustee or trustees can make the rules for the beneficiaries and also from the grave. There's no infighting. There's no contesting the will in court. There's nothing like this. True story. One of my clients, husband and wife, who have 4 apartment buildings in Los Angeles. Their adult daughter can live in one of the apartments, but they put into the agreement, the rental agreement, she lives there rent-free, but she must pass 4 random drug tests per month to stay there. She has a slight problem. She actually took her parents to court saying this was unconstitutional. The judge read over the trust, and he said to her she has 2 options. Option A, pass the drug test, stay there living rent-free. Option B, move out and start paying rent. I do not want to be invited to their Thanksgiving dinner. Fourth thing is non-grantor. This makes the trust completely private. You cannot have someone who will be a trustee. You cannot have someone who will be a beneficiary. There'll be somebody who's never going to be part of the trust, will sign up to be the grantor or the settler, and then sign themselves away. You will need their social security number to do this. It is not a speed bump. I have done this for many of my clients, and it's a very simple thing to do. Going back to the family trust, my mom and dad were the grantors of the Gibbon Family Trust, real original. They were the grantors or the settlers of the trust. So when they both pass away, that trust dissolved. And then finally, spendthrift. This has been in front of the United States Supreme Court on 2 separate occasions, and both times it's won. You can't get more legal than that. Now, like I said, Paul Benson, a Harvard law professor, wrote 5 separate trusts. Today, we're only going to talk about 2 of them, the business trusts and the beneficial trusts. The other 3 trusts I can sell, the non-charitable trusts, the senior trusts, and then also the mineral rights trusts. I've only sold 1 mineral rights trust. One of my beneficial trust members inherited his grandfather's horse farm in Oklahoma that has 6 oil wells on it. He needed the mineral rights trust to save the taxes on all the oil wells. So let's get into this. The business trust is for all U.S. business owners, entrepreneurs, franchisee owners, and 1099 income earners. If you are paying your own taxes or a 1099 income earner, you will save at least 90% on federal income taxes, and in 43 states no longer pay state income taxes, year after year, generation after generation. Personally, I started my trust. I'll tell you my story in just a minute, but in 2022 and 2023, I personally saved 93% on my federal income taxes. In 2024, I saved 94% on my personal income taxes. I paid 6% to the federal government. I did not pay state income taxes, North Carolina state income taxes. I still paid gas taxes. I still pay food taxes. I still pay takeout taxes. I am not tax-free. I'm just not paying state income taxes. This is an actual client. He called me on January 3rd, or he set an appointment on January 3rd, 2024. He's a 29-year-old single guy, ladies, living in Virginia. He's former military, and he works as a salesman being paid in 1099 income. In 2024, he knew he made $150,000 in 1099 income and had nothing to show for it. He was living in an apartment with 2 roommates and driving a 10-year-old car. He started the trust January 5th, and if his salary is $150,000 in 2025, he will save 90%, $25,962 in federal income taxes. On top of that, state of Virginia has 5.75% state income taxes, which is an additional $8,625. So he gets to save $34,587 per month with the Business Spendthrift Trust. We're now in the middle of July, so if you're thinking about this monthly, I don't have the figures in front of me, but I believe it's about $2,900 per month he has access to that he can do whatever he wants. His plan is to save the money and use the $34,587 in 2026 to put a down payment on a house. It's whatever you want to do with the money, year after year after year. If he makes more than $150,000 in 2025, he'll save more in taxes. If he makes less than $150,000 in 2025, he'll save less in taxes. But he knows where he's going to be right now with the business trust. Unfortunately, I cannot help W-2 income earners with the business trust. When you're a W-2 income earner, your taxes are taken out before you find your paycheck. There's nothing I can do for that. Now we're going to go to the beneficial trust. Whoops, no, now we're going to go to my story. I should know my slides. I'm sorry about that. My personal story. I was living in Phoenix. My mom and dad were living in Goodyear, Arizona. And they left a week before a wedding. My oldest nephew was getting married in Charlotte, North Carolina. They drove from Goodyear, Arizona to Charlotte, and I could not get time off. My father called me Thursday before the wedding. I was going to fly out on an overnight flight on Friday. My father called me to say my mom was in the hospital, but my mom was in the emergency room and they weren't sure what was wrong. I worked Friday before the wedding, took a midnight flight from Phoenix to Charlotte, met my oldest nephew, my younger nephew, and my dad for breakfast. Then my dad took me to the hospital to see my mom. I walked in on the priest giving my mom last rites. She had septic in the blood, got into her pacemaker. They had to do open heart surgery, take out her old pacemaker, put in a new pacemaker. She was on a ventilator for 13 months, in a hospital for 15 months. And my dad, who had planned to be away for 2 weeks, stayed with my mom the entire time in Charlotte. I, being a good little real estate investor, got a bank-owned property in North Carolina so I could write it off on my taxes. July 2020 for $20,000. I knew when it went to auction, it would start at $50,000, and I had just done my taxes. In 2019, I wholesaled 7 bank-owned properties nationwide and paid off $184,000 in taxes, and I had $50,000 in my bank account. Going back to the slide here, my tax rate went from 22%, where I thought I knew what I was doing, up to 24%. And on April 4th of 2020, my CPA called me to tell me I owed $94,000 in short-term capital gains. I only had $50,000 set aside. My real estate completely shut down when COVID started around St. Patrick's Day, 2020. I took out a HELOC on my paid off house, defeats the purpose of being paid off, and I researched the Rockefellers Spendthrift Trust. I knew it was called The Office, and I took 5 months to research this. In September of 2020, I started both my business and my beneficial Spendthrift Trust. I have 3 online businesses that pay me in 1099 income. That's my business trust. My beneficial trust is for all investors. I'll show you what you'll save in just a minute. I had this in my LLC. I did 2 simple bill of sales. I actually Googled bill of sales. First bill of sales said I take Rocky Mount from my Sally's real estate team and sell it to Sally Gimmon. And then the second bill of sales said I sell from Rocky Mount from Sally Gimmon to her beneficial Spendthrift Trust. I went to the bank, got them notarized. I happened to have $10 in my wallet, handed it to the banker. He made a note in his notary book and handed it back to me. That was consideration. Drive home, I'm living in Phoenix. I scanned them, sent a letter to the attorney in Raleigh, North Carolina. Next day, he writes back to me and says, I need the first page of your trust. Sent that to him. The house did not go to auction until August 28th of 2021. And it started off at $50,000, where I knew if it's only stayed at $50,000 at 24% tax rate, I would owe the federal government, or I would save $7,170. When it finished at $64,326, without lifting a hammer, woohoo! The way I like to real estate, I like to invest, I made $44,326 on one property. More importantly, at 24%, I got to save $10,368 I would not have to pay April 15th of 2022. What I did with that $10,000 is I put it into more real estate and have grown my real estate empire. So with the beneficial trust, you're going to save the following 5 taxes. You will no longer pay short-term or long-term capital gains when you sell something at a profit. Short-term capital gains are just like federal income taxes. So if you're selling crypto, you're a forex investor, you're wholesaling, you're fix and flipping, you're doing auction houses or tax liens, you will not pay taxes. Long-term capital gains are either 15 or 20%, and I'll get to those in just a minute. You will no longer pay interest income taxes. If you're a passive investor, you're in mutual funds, you're in a REIT, you're doing subject to real estate, you're doing the BRRRR strategy. I have notes where on the paper of the house, people pay me their mortgage. Creative financing, seller financing, or forex investors. Yes, forex investors, you get taxed twice. Think of how much money you could be saving. You'll no longer pay dividend income taxes. If you are in the stock market, you're a day trader, you're an options trader, you're a futures trader, you're doing commodities, or you're living off of dividends. You will no longer pay rental income taxes. So if you have short-term rentals like Airbnb, vacation rentals, 3 doors, 5 doors, 10 doors, 20 doors, 100 doors. Maybe you're in commercial property. Maybe you have multifamily or apartment buildings, or maybe you're doing Airbnb arbitrage. One question I get asked every single time, what if the property has a depreciation schedule? Move it into the trust. What if the property is on cost averaging? Move it into the trust. The 3 ways you'll save, remember, you'll save taxes year after year, generation after generation. You're going to keep your information completely private. When I started real estate investing, they told me I needed a separate LLC for every one of my properties. I had 6 when I started this trust. They did not tell me, my real estate group did not tell me that anyone could go to, in Arizona, it was a corporation commission. Here in North Carolina is the Secretary of State. Anybody can research online at either state organizations 24/7, either my name or the name of my LLC, and 40% of those companies get sued every year. Then also remember that all lawsuits become frivolous. So let's say you have a true story. Let's say you have a single family home. The renter's dog gets out, bites the mailman. The mailman tries to sue you. He can only go after the renter. One of my clients contacted me. He was getting sued for $200,000. And I just said, you've got the name of the attorney. Send the first page to that attorney and that lawsuit will go away. It did. He's just like, this is amazing. The last tax that's not on here is royalty income taxes. They're taxed a little bit less, between 10%, 7 different layers, up to 35%. They affect you if you are an actor, an actress, a musician, an author, an artist, have intellectual property, patents, or copyrights. The late, great Robin Williams had the Beneficial Spendthrift Trust. Even though he committed suicide, his 3 adult children who inherited all his work, his movies, his comedies, everything else, they do not pay any royalty income taxes ever again. So this is just showing, as an example, if you make $50,000 profit, depending on what tax bracket you're in, this is how much it will save you year after year, generation after generation. So when I was at 22%, it was $11,000, and at 24%, it's $12,000. The house that I showed you earlier, this house, I made $10,000. It was $44,326, so it was a little bit less than $12,000. In 2019, I wholesaled 7 bank-owned properties. I made more than $50,000. Not trying to crow, but just saying. Now, long-term capital gains are either 15 or 20%. I'm not a CPA. I give the numbers for whoever does this. But when you sell your business, when you sell an investment property, or a baseball card. A son saw my TikTok video. He knew his parents were selling a 42-year-old Kentucky restaurant, as is. Jim and his brothers built this restaurant back in the 80s. They were selling it, everything in there, the cutlery, the food, everything else, for $3 million. Got Jim on his first Zoom ever. He was working with a business broker, Sam. We had to contact Sam to change the contract. Instead of selling it to Jim and his wife, they were selling it to the trust they were setting up. Sam's like, I'm going to make $30,000 off this deal. I'm a 1099 income earner. I need a business trust. Sam bought that. I told Sam about my affiliate program, free affiliate program. Sam tells Michael, who's buying this restaurant, it's his 7th restaurant in 3 different states. Michael buys the business trust. Sam makes an extra $1,000 on the deal. Jim's wife, Marianne, knew about this. She knew about the trust. She didn't know how much they were saving until they went to the closing table. On March 30th of 2023, I get an unsolicited phone call from Kentucky. It's Marianne crying happy tears. She's just like, do you know what? They were moving to Florida to be near their daughter with their 3 grandchildren. She's like, I'm going to contact my lottery dream home on HGTV or something. They're going to look for a condo between $450,000 to $600,000 and call it the capital gains condo. Again, if you want to find out more information, I have a free class at www.sallygimmin.com. You'll get a presentation very similar to this. 3 articles from Forbes magazine. I did not write, Forbes did. 2 pages of case law so you can research this to your heart's content, and examples of clients saving thousands of dollars. If you want to set up a 30-minute tax breakthrough session with me, today I talked to a gentleman, actually a doctor. As he was driving, we went through everything. I sent him an email showing him how much he would save. I take you out to NerdWallet and show you the formula, and it'll give you the exact numbers. I want to teach this to as many U.S. business owners, entrepreneurs, franchisee owners, 1099 income earners, and all U.S. investors, I don't care how you invest, to how you can save taxes. This is not taught in schools. There are over 1 million attorneys in the United States, and only 4% are trust attorneys. Paul Benson wrote these trusts 77 years ago. There are over 800,000 trusts that the law firm has. Not a single one has ever been audited. They're so confident the grandson and the great-grandson will give you a certification saying if you get questioned by the IRS, they'll defend you free of charge. It's happened once in 77 years. If you want to save taxes, keep your information completely private, and make all lawsuits frivolous and go away, please don't hesitate to set up a 30-minute tax breakthrough session with me. This is the secret of the rich. Now you know it, put it into effect. Thank you for watching. Have a beautiful day. Bye-bye.